Let's talk to the management of KPIT Tech. Ravi Pandit, who's a co-founder, chairman and group CEO of the company, joins in to discuss their numbers and more. Thanks very much for taking out the time, Ravi, to speak with us. How are you looking at the organic growth in this quarter, which was at 1%, while micro-fuzzy contributed the rest? Give us a volume versus pricing comparison and the traction seen there.
Yeah, so we have grown. There has been naturally growth different in different segments. If you look at the overall engineering growth and digital growth, it has been decent. Whereas there has been some degrowth in some of the traditional ERP related businesses. And it's a combination of the two that has given us little over almost 4.5% growth quarter on quarter. There is also growth which has come in from products.
Okay. Ravi, hi, morning. Since the consolidation of micro-fuzzy is already done with, what sort of revenue contribution do you expect from it over the year? And its margins, would you say you'd be able to clock better than your current average?
Yeah. So on the revenue contribution, as we have said, our growth in revenue over the next year would be somewhere in the region of 6 to 8%. Out of that, maybe 2-3% will come from micro-fuzzy and the remaining will be organic. Now, as far as the margins are concerned, we have to balance some of the things that will happen over the next year. Even in this quarter, if you see on a constant currency basis, our margins went up. Looking at the next year's margin, we expect that there might be some headwinds on account of forex. There may also be some headwinds on account of the increments that happen. We don't know how much and in what quarter we will be doing that. But on the other hand, you can see that our offshore utilization is something like 68%, and there is a substantial headroom there. During the last year, we added quite a few freshers to bring in new skills which are more of the digital technology area, and these freshers are not being fully utilized. We believe that we should be able to get our growth without adding any more people. That should give us the margin expansion that we are looking at.
Okay, so can you just put it down to numbers? I mean, 9 to 10%, or you can maintain 10% plus on margins for this year, FY18 that is?
So we should be able to maintain the margins, may be able to improve it a little bit more.
Okay, so I take that as around 10% is where you're looking at targeting margins. Your top client grew, Ravi, 2.1%, I mean marginally in the quarter. Your top 10 clients grew again, 0.7% Q on Q.
Yes.
How are client budgets shaping up and spending, what's the outlook thereof on client spending for the rest of this year, or actually for FY18 compared to FY17? Primarily because Gartner has sounded out that client budgets are retracting quite considerably.
Yeah, so I think a bit of it is sectoral and it is relating to the services. So, a large chunk of our revenues, as you know, comes from the automotive area. And within that, a larger chunk comes from the engineering part. And in that area, we see budgets happening. We see budgets happening in the area of digital technologies, where of course, the per contract value is a little lower. But on the other hand, and as Gartner has rightly said, the investments that companies are making in their traditional IT areas are definitely shrinking. And in some sectors, the shrinkage is even more than others. So for example, if you look at energy has been a vertical for us. Energy has seen a reduction over a period because, the whole industry is suffering from, and the area in the industry that we work with is more on exploration than on distribution. And that area has seen some suffer. So long story short, I think the budget reduction, the investment reduction by the customers will depend on which vertical that we are looking at and which services we are looking at. And we have a mix of both.
Okay, let's talk about, the geographics of it all. Europe as well as the rest of the world have led growth, while vertically it's auto and transportation, followed by energy and then utilities. What's the outlook for the US market and the verticals like manufacturing, utilities, which continue to be a drag for you?
Yeah, so we believe that a larger part of our growth in the US will be coming from the automotive sector. That should give us better traction. We are beginning to see some traction in utilities. We also see some traction in life sciences. So these are the areas where we will continue to see growth. But whereas some other sectors, we have to see how it pans out.
Broadly speaking, I can talk about your service lines as well, but broadly speaking, Are you optimistic about FY18 from what you've delivered in FY17 in terms of the growth that you see in sales and profits?
Yes, certainly. That's why we feel that we should be able to grow between 6 to 8% year on year, whereas this year the year has been somewhat flat.
And what, part of the reason which is driving this cautious optimism, as I may put it, is the fact that profitability may come back in the US with a conducive tax policy. Is that your premise as well, given the challenges otherwise that you're facing on pricing as well as client spending?
I should say that's the silver lining to the cloud. I mean, we all know what's happening on the visa front. But yes, that tax policy should help.
Okay, I also want to address one last lot of challenges for you, which is less SBU-led and more to do with client-specific issues. When do you see respective clients stabilizing or becoming less relevant inside? Where are you looking to broaden your client base, get more volumes in, and have more deal wins?
Yeah, so we believe that in that area, our traction will continue to be high on the automotive and transportation side, which is where we have a pole position. We also should see some traction on account of digital part, where both in the ERP domains we are seeing growth. Like for example, in the HANA side or in hybrid side, which are part of overall SAP, but which are digital in nature. Or if you look at the Oracle side, you see traction in the area of MDM and such technologies. So we should see traction in both these areas in the year